What is up guys, Max Norbury here from howtotrade.com. Now I hope you're all doing well. Now team, got something really interesting for everybody here today. What we're going to be thinking about is the bull and bear flags. Now when you're thinking about stock markets, everybody has or must have heard of by now the bull or the bear flag. Now the bull or the bear flag is a very commonly used tool. It's a pattern breakout. And it's been built up in loads of different strategies and trading systems by a ton of different professional traders out there. But nobody ever really gives any clear indication of what the bull flag is, but more importantly, how to actually trade it. I mean, you can Google image, the bull flag and the bear flags, but how do you actually trade that? Is there a trading system out there that can just use those in particular candlestick patterns to make profit in the markets? Okay, now that is obviously the question that you all want to know. That's the question that I am essentially here to answer. Now guys, my name is Max Norbury. Like I said, I have been in the markets now for 11 years. Unbelievable. Considering I'm only 30 years old, I am relatively young. I'm definitely still relatively young. And thinking about it, I've been all over the place with my trading journey. Now, not a professional trader for 11 years. I was actually a retail trader, just like you, for quite a while there. From the ages of 19, heading up to 20s, early 20s, 24, 25. Got myself a job at a little prop firm in Chicago. Worked at the prop firm there for a while, and then went on to the City of London in the United Kingdom, and absolutely had a ball with a bunch of my trader friends over there at the firm in London, which is great times. But guys, anyway, let's get that out of the way and let's start looking at some charts. So today our studies are going to take us on to the Agilent Technologies Inc. Now this is a listed New York Stock Exchange stock. It's trading at the moment at about 131 bucks a share, which is generally, it's definitely not a penny stock. It's quite a big stock there, listed on the NYSE, and it's been trading on there for quite some time as well. Now, generally speaking, when we're thinking about what types of stocks, are bull and bear flags going to work best on, I think as a new beginner, you definitely want to be thinking about those penny stocks, guys, okay? Because those penny stocks, the ones that are trading sub $10 a share, that means with a small account, you can actually keep that risk quite low. You can get there, you can get down there. In order to make a buck or two on Agilent Technologies, for example, you're going to need quite a large account to be able to day trade something that costs 131 bucks per share, rather than something like, we take anything, for example, like on LIXT, for example, which is currently trading at approximately $4 a share, maybe $3.50 a share. With a small account, you're going to be able to increase those share sizes for your day trades, and you're going to be able to keep that risk lower because the share size is lower. But in terms of the actual candlestick pattern that we're thinking about here, the bull and the bear flags, those are really simple candlestick patterns, and they happen all over the markets. Now, the thing about stocks, guys, is that stock markets run a little bit differently than something like, let's say, for example, the Forex market, or, something else like stock index markets as well. The thing is, a single stock can, upon opportunity, run up to maybe 1,000% gains over a very short period of time. They are extremely volatile, or can be. They can be extremely volatile. All dependent on different components surrounding fundamental catalysts. If there was something, positive news that took place overnight when the US traders get to the team, get to the party at the 2:30 open for us in the UK, that is, you generally will see a very big gap where the pre-market trades are being executed and the pre-market prices are flying through the roof. You can really see some massive gains. But with that comes the fact that if you're day trading that volatility, you're going to be able to want to look out for those signals on very low time frames to show that directional confirmation that you're looking for in order to get into a trade. So let's say, for example, you want to take a long, okay? You want to go long. Let's say we want to go long Agilent Technologies, for example, okay? So if we're looking for a long in Agilent Technologies upon the market open, we don't want to just take a long at the market open price, because a lot of the time, prices actually come down at the release of 2:30 when the bell rings. Generally, those prices, they can actually come down a little bit, and then they surge in momentum. Now, you don't want to be in at the highs. You want to get yourself in at a bit more of a better price. You want to get your order filled lower down. So you don't really want to be caught you know, in a bit of a bad situation where actually you have to go into a loss first in order to make some gains. And that's exactly the sweet spot where those bull and bear flags fit in. So what I'm going to do is I'm actually going to change this one, guys, because for the sake of, you know, for the sake of giving you a really realistic expectation here, I'm not going to focus on Agilent Technologies, because at the end of the day, like I said, 131 bucks a share is going to be a little bit too pricey for the mass majority of new retail traders in the stock market. So let's have a look at the one I mentioned just a moment ago, LIXT. So LIXT. Okay, so this is Biotechnology Corporation at the moment. They are currently trading at a grand total of $2.85 a share. Okay, so they're super low price stock, which makes this perfect in terms of explaining good opportunities based on bull and bear flag breakouts. Now guys, as you can see at the moment, we have had some relatively choppy price action. We have been going to the downside here for a little while, found a bit of a bottom, been trading along, and now we're right over there trading at the 285 level. Okay, so basically what we're looking for here is we're basically looking for price action that's had a bit of a run and then it's having a price action pullback. Okay, it's had a little bit of a run, it's had a good run to the upside or a good run to the downside. We've seen those decent volumes, but then it's stalled and it's stopped. It's had a bit of a price action pullback, and then we're looking for that momentum to then continue from there. Okay, so what I'm actually looking at, I'm going to trade this down on the 1 minute time frame. You can use this on multiple time frames, but generally speaking, you know, for the sake of getting the point across, we're going to stick to those low time frames, as the 4 hour time frame, for example, can take a hell of a long time to form. So 1 minute chart down here, and we are simply going to be going through a little bit of price action, just looking out for those bull and those bear flags. Now this is a pretty good bit of price action right here, so I'm actually going to extend this one and bring this open so it's nice and clear and everybody can see what I'm talking about. Right, so in this bit of price action here, everybody can see that we are traveling to the downside. Okay, we've got a really nice top off here. We can see the price action is making a nice series coming down here and losing that momentum. Okay, so what I'm actually going to be doing here is looking for potential entry opportunities. Now, if I get to the market, okay, if I get to the market at the beginning of the day and I see the session and we're trading at around this level here, okay, everybody keep their eyes on that area right in there, that low of the candlestick. I don't want to get in there. I mean, at the end of the day, I could probably save myself 20 cents on the share. Now you think, oh, what's 20 cents? But guys, don't forget, when you're executing a share size of, let's say, 500 shares in order, that 20 cents is really going to add up. And it definitely is going to make a difference to your trading balance at the end of the day. Okay, so what I'm going to be doing is I'm going to wait for a bit of a price action pullback, i.e. this level here. So we get the price action which topples off, we get this big strong move to the downside. We then come up here, we can see that price action is actually forming a bit of a high here, failing to break and close above. We know that momentum is still good to the downside because we are failing to break out of this high. Okay, price action on this 1, 2 and 3 is failing to make any higher high than this individual candlestick, this one right here. So as soon as we see this candlestick here form a big lower low, we execute our trade. Okay, so this here is our execution candle. As soon as we see that candlestick form a lower low, that's exactly that sweet spot that I'm looking for when I want to get myself bang into a trade and ride that momentum to the next leg, to the downside or the upside. Okay, now for everybody who's confused, if you are confused at the moment, let's just run through this a little bit more slowly. Okay, so once more, this here is the candlestick where the market opens. Okay, so this candlestick is our market open. Okay, market open candle is this one. Now, we do not want to get involved in this stock at the market open because we want to wait to, get a better order fill. Okay, we know that the market generally is going to have a price action pullback at some point. We don't exactly know when that's going to come into play, but what we know is that there's been a huge gap to the downside. Okay, so this is a really nice big gap to the downside. We then have our price action pullback, okay, and we can see the flag formed. Okay, so there we have our bear flag. Now, as soon as we have this high and we see 1, 2, and 3 candlesticks failing to break and close above that high, we can see just the left-hand side there, that is the sweet spot. All we're waiting for is a bearish candle to form a lower low than these 3 lows and break the flag, and then we can get on our way. Then we execute our trade to the downside and price falls away, okay? And we have the exact same thing that happens here as well. Okay, so price action comes down and then we reach this area. We come up for a price action pullback and this high fails to break this low. Okay, so then what do we have? We have yet the next bear flag. So if you were a trader that was a little bit late to the party, maybe you didn't quite make it to that market open, you're looking for a better fill price, this area is exactly where you want to be looking. Market comes up here, we pull back, we break the flag, and this is where your execution is going to be. Market price drops straight away to the downside. And you can literally continue to trade this way the entire time, trading the bear and the bull flag breakouts, okay? And that makes up a significant part of my actual trading strategy in the markets, okay? Now guys, there might be just one other thing that you've noticed here. The candlesticks are looking maybe a little bit odd to you. I actually use Heiken Ashi candles, only a little bit of the time to get that trend detection. Most of the time I do use the Japanese candlesticks, but for the sake of this, they're really nice in representing where those price action pullbacks are and where the breaks under the previous lows are. So just to give you a bit of a guidance there around the difference between the two candles. If you were looking at Japanese candlesticks, you'd probably be looking at something like this, for example. Okay, so the Japanese candlesticks on the stock charts look very, very different because sometimes in a minute the share price doesn't actually move, which makes it incredibly difficult to actually get a visual representation of the direction of the trend. Now, if you look at that exact same bit of price action here with the Heiken Ashis, you can see that everything looks very nice and clear and you can see exactly where the market is trading. Okay, so that's a little bit about the bear flags there, guys. Now, what we're going to do next, we're going to have a little bit of a look at bull flags. The exact same concept is applied here in terms of the candlestick pattern that we're actually looking for, but this time we're looking for bullish moves and not bearish moves. So let's keep going along. This stock price has actually been taking a bit of a plunge for a while, so probably have to go back a little bit. Okay, great. This is a decent one here. Okay, so this is a nice bit of price action that we can be definitely getting some good study on. So we get this move right here, okay? So we can see at the moment price action is, okay, formed this low. So price action's come down here, it's formed the low, definitely find a little bit of support there at the moment. We've then bounced back. Now this is considered the price action pullback, okay? So price action's come up, it's formed this huge candlestick up here. Okay, so this is a really, really big candlestick. Now that's the market open candle. Okay, so you don't want to get involved on the market open candle. The market open candle is gapped right up. That's going to give you a bit of a poor fill price. So what you want to do is you want to wait for that price action pullback. Price action pulls back down here. Okay, and there we have our flag. Okay, so there we go. We've got our flag. As soon as you see price action break out of this area here, we execute the trade. Trade's executed, price action takes off to the upside. Okay, so that's exactly the same thing right there. Looking at those flag patterns, waiting for the flag to be broken out, and then we get that great continuation to the upside. Now, people trade bull and bear flags on their own, or they use things in conjunction with that chart pattern to back up their process. Now, for me personally, I actually use volume indicators and something called the VWAP, and that's the volume weighted average of price. I'm not going to talk about those in this video in particular, but I use those as additional confirmation because they can give additional confirmation, additional bias to the price action chart patterns that I'm trading in the stock market for day trades. Alright guys, so I'm going to wrap this video up there. It's just a really nice little guide around bull and bear flags and what we're kind of looking for in the charts when we are looking for those flag patterns. I'm not entirely sure what this is going to be like for you guys out there, is there is such a vast number of traders in the world at the moment. I have no idea about your experience levels or exactly where you are in your trading journey, but please, by all means, join our How to Trade trading room. I'm on live twice a day, every single day, talking about patterns just like this in the stock market, the commodities market, and of course the Forex market. So guys, before I go, don't forget to hit that bell icon to remind you of when the next video is coming out. Hit that link down below to subscribe, and please feel free to join us in the How to Trade trading room at any time. It's been an absolute honor, guys, and I can't wait to join you again in the next video. Take care, good luck, above all else, trade safe. I'll see you then.